Hello and welcome. In today's macro update, we'll be analyzing the latest Federal Reserve policy meeting, one that made headlines not just for what was done, but for the growing rift within the Fed itself. Let's unpack what this means for global markets and the currency dynamics. The Fed kept its benchmark rate unchanged, marking a continuation of its cautious stance. However, this meeting was anything but quiet. Two board members, Michelle Bowman and Chris Waller, both appointed by President Trump, voted for a 25 basis point rate cut. This is the first double dissent from the board since 1993, and it speaks volumes. Their concern, a softening labor market and slowing forward indicators that point to weaker growth in the second half of the 2025. But Chair Jeremy Powell pushed back. He emphasized the Fed's independence and the data-driven approach, making it clear that the short-term political pressure won't dictate the long-term monetary policy. He even signaled that the holding rates could be viewed as looking through tariff-induced inflation, a direct message to those urging premature action. So, what's the data saying? The Fed acknowledged growth has moderated in the first half, but it's far from alarming. The June jobs report was strong. Quarter 2 GDP beat expectation, and the labor market is still considered solid. However, the inflation uncertainty remains, especially from the President Trump's proposed tariffs. The Fed isn't ready to act until the picture becomes clearer. That's why Powell avoided giving any firm forward guidance for the September meeting. Two major data releases on inflation and jobs are due before then. That could be decisive. Markets took note. The dollar index surged nearly 1% to 99.95 levels, supported by the Powell's hawkish tone. Emerging markets, particularly those with exposure to US tariffs, saw sentiment turn cautious. Meanwhile, the probability of a September rate cut has fallen sharply from 58% a week ago to just 39% now. The Fed may be holding steady, but the divergence within is growing louder, and the markets are paying attention. The road ahead, it's all dependent on the economic data. With internal dissent rising and the external pressures mounting, the Fed's balancing act is becoming more complex. Stay tuned and we'll keep you updated on every shift that matters. Thank you.